Imagine walking into a digital art gallery where you can own both the artwork and the currency to buy it. Sounds confusing? Well, that's the world of NFTs and cryptocurrency we're living in today. While these digital assets often get lumped together, they're actually quite different beasts with their own unique advantages and drawbacks. Let's start with cryptocurrency. Think of it as digital money that exists purely in the virtual world. Bitcoin, Ethereum, and thousands of other cryptocurrencies are essentially digital tokens that can be used to buy goods, services, or traded for traditional currency. The beauty of crypto lies in its decentralized nature. No single government or institution controls it. One of the biggest advantages of cryptocurrency is its potential for significant returns. Early Bitcoin investors who bought in at a few dollars have seen their investments grow to tens of thousands. Crypto also offers quick, borderless transactions without traditional banking fees. You can send money across the globe in minutes, not days, and often at a fraction of the cost of traditional wire transfers. However, cryptocurrency isn't without its downsides. The market is incredibly volatile. Prices can swing wildly in a matter of hours. Remember when Bitcoin lost half its value in early 2022? That's the kind of roller coaster ride crypto investors need to stomach. There's also the issue of security. While blockchain technology is secure, crypto exchanges can be hacked, and if you lose your digital wallet credentials, your crypto is gone forever. Now let's shift gears to NFTs, non-fungible tokens. Unlike cryptocurrency, where one Bitcoin is identical to another, each NFT is unique. Think of them as digital certificates of authenticity for virtually anything: artwork, music, videos, even tweets. Remember when the first ever tweet sold as an NFT for millions? That's the kind of unique ownership NFTs enable. The pros of NFTs are fascinating. They've created entirely new opportunities for artists and creators to monetize their work. Digital artists who previously struggled to prove ownership of their creations can now sell them with built-in authenticity. NFTs also allow for ongoing royalties. Creators can earn a percentage every time their NFT is resold, something practically impossible with traditional art. But NFTs face their own challenges. The market can be even more volatile than cryptocurrency. An NFT worth millions one day might struggle to sell for a fraction of that price the next. There's also the issue of environmental impact. Creating and trading NFTs requires significant computing power, leading to substantial energy consumption. Both crypto and NFTs share some common advantages. They're both built on blockchain technology, offering transparency and security in transactions. They're also both pushing the boundaries of what's possible in the digital economy, creating new opportunities for investment and ownership. However, they share some common drawbacks too. Both markets are largely unregulated, making them susceptible to scams and fraud. They're also both relatively new technologies, meaning their long-term stability and adoption remain uncertain. Understanding these differences and similarities is crucial for anyone looking to enter the digital asset space. Cryptocurrency might be better suited for those interested in alternative forms of currency and payment systems. It's more liquid, widely accepted, and easier to understand from a value perspective. NFTs, on the other hand, might appeal more to collectors, artists, and those interested in unique digital ownership. They're perfect for those who value uniqueness and want to support creators directly. However, they require a deeper understanding of digital art and collectibles markets. The future of both assets looks promising, but different. Cryptocurrency is increasingly being adopted by mainstream financial institutions and even countries as legal tender. NFTs are evolving beyond simple artwork sales into gaming, virtual real estate, and digital identity verification. The key to success with either asset is understanding their distinct characteristics and risks. Cryptocurrency's value lies in its utility as a currency and store of value. NFTs derive their worth from uniqueness and cultural significance. Both can be valuable additions to a digital portfolio, but they serve different purposes and come with different risks. Whether you're interested in cryptocurrency, NFTs, or both, the most important thing is to do your research and never invest more than you can afford to lose. The digital asset space is exciting and full of potential, but it's also complex and volatile. Understanding these pros and cons is your first step toward making informed decisions in this fascinating new digital frontier.